Good morning, everyone. You love when we do these pre-market earnings reports, don't you? I know you do. We're looking at Home Depot today. Obviously, you see it's not a good-looking stock chart today. Again, it's going to be unfair for me to say that this is anything related to earnings, just because of the fact that there's a broad market sell-off today. Pretty much all the major indices down close to 5% today. It's quite the sell-off. I can't lie to you. So again, I'm not going to put the earnings in perspective of what the price is today because I don't think it's at all relevant. I don't think it's fair, but we're still going to look at these earnings. I was expecting some pretty good numbers. We saw really good numbers from other retail giants like Walmart. Obviously, Home Depot, the leader in the home improvement division in terms of retail. I expected really good numbers here, really good comp sales. EPS line wasn't sure on that one, but I definitely thought revenue would be a good beat. Let's take a look at these earnings. So, a quarter four GAAP EPS of $2.65 is a beat by 3 cents. Actually, pretty impressive. You saw Walmart took a big hit due to some property reconsolidation, but overall, Home Depot here posts really good EPS line. It's a really good EPS line and a beat. Now the revenue again, like I mentioned, holy crap, that's incredible. Revenue of $32.26 billion, up 25% year over year. This is a retailer, by the way, a brick and mortar retail company, up 25%, which is a beat by 1.69 billion. That's right, 69. But that's impressive. My favorite, by the way. That is quite impressive by them to post that revenue line. It's quite impressive. Comp sales of 24.5% growth versus a consensus of 19.2. I mean, that's pretty incredible to see growth of that caliber from a retail company. Pretty nice to see. So again, from all perspectives here, frankly, it looks good. Now, the only thing I could mention, obviously, you saw with Walmart is the guidance was down, and that led to, obviously, a sell-off in that aspect, too. But, again, I think that sell-off was unwarranted, if we're being 100% honest here, because primarily the sell-off happened because, what a shocker. You're not going to earn the revenue that you did in a year that was boosted by a pandemic that caused people to go out and shop. Not a shocker. If you look a 2-year comparison, it's still going to be significant growth year over year, I should say, I suppose, year over 2 years ago. So it's just Wall Street being dumb. But again, I think this is more due to a broad market sell-off. But again, I don't know what the guidance looks like. Well, look, they also raised the dividend by 10% to $1.65. I mean, forward yield of 2.39. I mean, that's not bad at all. We're not going to be upset about that one bit, okay? Thank you, Home Depot. You're consistently doing some good stuff. I can't lie to you. Let's look at a little bit more details. Transactions were up 12.8%. That's crazy. And average ticket was up 10.8 as well. So as we saw still with with Walmart even, transactions were still down year over year, as they saw most of their growth come to e-commerce, but people were definitely going into stores for Home Depot here. Transactions up and average ticket up by a significant margin. Double-digit growth in both aspects is crazy. Crazy to see. Gross margin at 33.6 versus 33.7 expected. 30.9 of a year ago. Not too bad. Really nice. But here you go, they are holding back on issuing formal guidance because that's hard to predict. And again, Walmart says a 3% decrease year over year. Home Depot likely going to do similar numbers. But it's hard to say, it is hard to say what that's going to look like for them. But not bad at all. I mean, that's honestly really incredible by them. We look at the press release, which is in tiny font. So, you know what? You can't say I never did anything for you. You can't. I'm zooming in for you. I'm kind of a good guy. What can I say? I'm kind of a good guy. So, fiscal sales for the full year came in at $132.1 billion, which is an increase of 19.9% year over year. That's incredible. for a full fiscal year there. Comp sales increased 19.7. Comp U.S. sales increased 20.6. Net earnings came in at $12.9 billion they brought in this year. Crazy, which compares to $11.2 billion of the year prior. So in a pandemic year, they increased that net income line by quite a big margin there. Pretty nice. And obviously we see they're not going to be giving any guidance. Dividend declaration, we saw that as well. So obviously, here's a chart of what you see difference-wise here. Nothing too crazy. Obviously, we do like to look at the net earnings line. Sorry there. That's highlighted here. Net earnings increased 15.2% year over year. $2.8 billion they brought home this quarter. Pretty freaking sweet, baby. And an EPS line increased 16.2%. Again, what I think is crazy is this transaction increase. It's really crazy. Even from the full year, saw an increase, which, I don't know. To me, that's crazy. To me, seeing a full year increase on transactions where every other retailer saw a decrease, it's pretty impressive. Average ticket up 10.8 on the quarter, but up 10.4 on the year. I mean, good grief. That's crazy stuff here. Here's the balance sheet, as we love looking at balance sheets. Full year comparison here. Minus 2 days, I should say. You know what? That's fine. But we see cash and cash equivalents increased by a good margin. They're coming in at 7.8 compared to 2.1. So overall, total current assets at 28.4 compares to 19.8 the year prior. Total assets in general at 70.5 billion compares to 51.2 billion. That's crazy stuff. Again, goodwill part of that, and other assets increased as well. Quite the increase in assets. You'd hope liabilities doesn't increase by just as much, but we'll take a look. Total current liabilities increased for sure. 23.1 billion compares to 18.3 billion. Not as much as the assets did, but and then total liabilities in general coming in at 67.2 billion compared to 54.3 billion. So an increase of around $13 billion there. But overall, stockholder equity definitely saw an increase. This was a stockholder deficit of a year ago, which seems crazy to see. Prior to pandemic, they had deficit. Now they don't. 3.2 billion on this equity line compares to $3.1 billion deficit before. So an increase around $6 billion there. Pretty impressive, actually, by these numbers. It's not the most beautiful balance sheet. I don't think anyone would disagree with that. The liabilities here, specifically in this long-term debt line, it can be concerning for some. There's no doubt about it. And obviously accounts payable getting higher, no doubt. But they did this to increase the balance sheet as a whole, really with an increase overall in cash equivalents. So think about that. I saw this in the, I don't know if it'll show on the, there we go, on the left side of the screen. I don't know if it'll show still, but there's like, it just looked like poo stains on my freaking monitor. I was like, what's going on here? If you look at the stock as a whole, without the poo stains, I mean, trading at a P/E ratio of 22, it's dirt cheap. Trading at a market cap of $279 billion when they brought in $130 billion, that's pretty cheap. One thing you'll note about this market and what they've done is these tech stocks have gone through incredible multiples here, where retailers who are putting up fantastic numbers haven't quite seen the same reaction. Whereas I think they should. Over the last year, the company, the Home Depot is only up 9% in a year in which they increased sales larger than that. Are you kidding me? They increased sales 20%, and the stock's even only up 9%. Seems crazy that an industry that's actually benefiting quite a bit doesn't see the same demand as really just because they're not a tech company. So, I don't know. That's my opinion on the matter. I think Home Depot is still worth looking at to buy. Consistent dividend yield on this company, consistent dividend, good valuation here. It's not overly priced. There's no doubt about it. They're just not overly priced. I think it's worth considering. It's just a good core retail holding if you don't have any exposure to the market. Definitely consider Home Depot. That's what I got for you today, and hope you have a great day.